Yuan and Panic of Chinese Mom-and-Pop Investors by www.forexconspiracyreport.com. The Chinese stock market has taken another plunge of 7% until authorities used a circuit breaker mechanism and stopped trading. Chinese mom-and-pop investors want out of the stock market, and every time trading resumes, sell orders flood the market again. From the Forex point of view, our interest is in the yuan and panic of Chinese mom-and-pop investors. The New York Times writes about how the second big Chinese stock plunge of the year has effects around the globe. Chinese stocks plunged on Thursday by more than 7%, forcing officials for the second time this week to halt trading for the day, in this case after just 29 minutes. The big question now is how much of the turmoil might eventually prove to have more to do with the internal dynamics of the Chinese market, where the first wave of sell-offs began last summer, or how much is based on broader economic fundamentals that will have a further impact on global growth. The Chinese economy is slowing from its previous 10% per year growth, and every time another economic report shows this to be happening, investors want out of the market all at once. To start the year, a manufacturing report showing another month of contraction started the selling binge. At the heart of this issue is the value of the yuan versus other currencies. The Chinese currency is overpriced and will fall in value as the market is allowed to take its course. In response, many Chinese investors are converting their yuan to dollars, euros, yen, or British pounds and investing offshore. The flight of capital out of China worsens the country's economic contraction, causing more panic in the markets and more money sent offshore in a recurring feedback loop. We asked the question in our most recent article if yuan losses will accelerate. The yuan will need to fall a lot more in order for the currency to match a true market value. The speed at which this happens will largely depend on how fast those in charge let it drop. As yuan losses accelerate, Forex traders will anticipate an increasingly weak currency until at some point the yuan will overshoot and then correct. The Chinese economy is the main driver in this situation. Again, the timing of the yuan's fall will likely be controlled by Chinese authorities, who will limit trading whenever it is ready to spin out of control. And Chinese authorities are increasingly worried about the steady shrinkage of their economy with its political and social consequence. In short, the Chinese accept the dictatorial rule of the Communist Party because the economy has been growing. When the economy collapses, all bets may be off. The spillover into the West. The world is interconnected as never before, and when mom-and-pop investors panic in China, markets react across Asia, Europe, and North America. As Reuters reports, Wall Street opens sharply lower on news of the rout of Chinese stocks. U.S. stocks opened sharply lower for the second straight day on Thursday after China allowed the yuan to decline further and oil prices slumped to near 12-year lows, raising concerns over the state of the global economy. A weakened U.S. economy will lead to a weaker U.S. dollar and take some of the pressure off the yuan. But China has a serious set of problems that have not been addressed over the years. The cause and effect circle of poor economic news, panic of mom-and-pop Chinese investors, flight of capital, and weaker yuan and worse economic news is likely to continue into the coming year. For more insights and useful information about Forex trading and markets, visit www.forexconspiracyreport.com.